Hey everyone, Josh Kelly, Citadel Benefits Group. Excited to share with you this program today. Before we get talking about it, I want to introduce our guests. We've got Wes Huffman, who's the Senior VP of Business Development at Equipoint Partners, and we have Clay Farrell, who's the VP of Sales there. And we always look for the newest thing, the best thing. There's a better option, a different mousetrap, or a better mousetrap. And one of the challenges that we face as business people, and just in general as a human being living today, we health insurance is an issue. It's not really something that anybody gets excited about and is really tickled about your health plan, because there's just a lot of issues. It's either too expensive or doesn't cover enough. I don't know that you'd probably be hard pressed to find somebody that's just really excited, unless they work for somebody that's just paying for it for them. And then they would probably fuss about it some more. But this is a great option that fixes a lot of things. We've implemented products like this in the past with a lot of our clients. I really like the spin here that they put on here with this program, and it's a little different than most. And I'm excited to share this with you guys today. So, with that being said, Wes, let's jump right into it, man. If you want to give us the rundown of the program and the product, how it works.
Absolutely. Josh, thanks for having me. I appreciate it. And hopefully you can see my screen now and technology's working.
You got it, man. We can see it.
Great. So thanks for having me. So our company is called Equipoint Partners. We developed a product called Pre-Med Defender. We're a group supplemental secondary insurance plan. So in the industry, you may have heard the word gap insurance. We're a gap that has no gap, so to speak. So, but we're going to talk really today about what you just said, the financial pain of healthcare today. Companies are having to go to high deductible health plans. There's rising costs of the out of pocket for the employees. More of the cost is being shifted to the employees, and they really are struggling to even have health insurance. They really have sickness insurance, because by the time they can save enough money to even pay the deductible, they're already too far down the road. So, with this problem, it really affects employers, employees, and the providers, everybody in the whole food chain. Employers are now having to go, like we said, to high deductible health plans. They're shifting now, having to put a lot of the cost to the employee. Premiums are going up. They can't keep up with it. And really, your smaller employers are the ones that are really hurt the most. 100-man groups and above, these jumbo cases, they can self-fund and they can pretty much control, to an extent, their healthcare cost. If you're under 100 lives or you're a fully insured group, you really can't control your healthcare. You're kind of stuck with what the rates are, and the rates are the rates. And every year you just got to live with it, with whatever rate increase you get. So there's really no way for a small group to really manage their healthcare spend. Employees are impacted, obviously, because now their out of pockets are higher. Their deductibles are increasing. Bankruptcy is now becoming the number one cause of bankruptcy is medical bankruptcy, medical bills. So, and people aren't going to the doctor because they're afraid they're going to have to come out of their savings just to go see the doctor, or they're going to get hit with a test that's going to cost them $2,000. And then really providers are affected, because now they're having to collect that money from the insured. It's not the insurance company they're going after. It's Mary Jane, and Mary Jane's got to come out with $500 or $1,000. And we've already seen that, just in last year, 120 billion of bad debt was reported out, off the book. So hospitals can't collect the money. Medical providers can't collect the money, so they're going after the members themselves. And there's options out there today. Most people know about HRAs and HSAs, and there's good things about them. There's also some disadvantages. HRAs, obviously, the employees can't contribute to those HRAs. Those are employer dollars. The employer owns the account, so if the employee leaves, they're going to lose that money. The employers have to contribute the same amount for every employee. So that means that if they do it for one, they got to do it for all. But the biggest thing with an HRA is employers can't really project what their costs are going to be, because they don't know how many people are going to hit their claim utilization. So they really can't budget out for an HRA. HSAs are kind of in the same boat. They're very complex to administer. The IRS has to get involved, and anytime the IRS gets involved, you're going to have regulations. There can be some potential for misuse. But the biggest thing too is HSA dollars don't, they accumulate monthly. So if someone has a claim early in the year, they might not have enough money saved up in their HSA unless they've been on it for a while to cover their claim. So, although those are good options, we think we have a better solution. And again, our solution is called Pre-Med Defender. We're a fully insured group supplemental medical plan, secondary plan, and we pair our plans with high deductible health plans. And by doing that, we're able to help control the healthcare spend for an employer and the employee and really limit their out-of-pocket expenses. Because at the end of the day, if you can't cover your out-of-pocket expense, you really don't have any health insurance at all. So why Pre-Med Defender? What makes us a little different? Well, we virtually can fit with any type of medical plan, whether it be a fully insured BUCA plan, level funded or self-funded. We can reduce overall premiums, at the same time provide richer benefits. We can dramatically reduce the out-of-pocket costs. Our benefits are paid directly off the primary's EOB. So if it goes toward a patient responsibility on the primary, we cover it. If the primary doesn't cover it, we don't cover it.
Join the meeting.
I think Clay's joined now. Another big thing is our benefits are paid to the provider. So a lot of other secondary or gap plans, they force the employee to pay the bill, pay the provider, and they get reimbursed. Our plans aren't reimbursement plans. They're paid directly to the provider. Another thing that's unique about our plans is that we can carve out office visits and prescription drug copays. And I'll get into that more in a little detail here later, but those are two really important pieces that we have that really our competition doesn't have in the marketplace. Something else too is we have dedicated account managers. You have to understand secondary insurance. You have to understand how it works, both on a provider level and on a member level. And so we have a staff of people who understand that and can talk to both the providers and employees and help them out. All our plans also include zero consult telemedicine, just to help out with urgent care matters. So our coverage options are pretty simple. We have a one bucket system, and that one bucket can be anywhere from $1,000 up to $20,000. We also have some optional benefits. What makes us unique is that we can move the copays from the primary plan over to our secondary plan, which helps to reduce the premium that you're going to pay to the your primary plan. But more importantly, we can move the prescription drug coverage. So in a lot of states, we're seeing where you take a Blue Cross plan, for example, in Tennessee, that's a PPO plan, $1,500 deductible with first dollar copays and first dollar RX copays. And then you compare that with a high deductible health plan that has no copays for doctor visits or drug card. It's all toward deductible. We've seen anywhere from a 30 to 35% reduction in premium. So that 35% reduction in premium, if we can then come back in and rebuild a plan, a secondary plan that has those same benefits, but at a lower cost, we in effect we've simplified the plan. And we like to use the word simple because if you look at the word simple, it's separate integrated medical plans that leverage exposure. And that's what we're doing. We're taking two medical plans. We're leveraging the exposure of those two plans to give the employee a lower cost plan, but with better benefits. So that's something that we think is unique. Again, we talked about the zero consult telemedicine that we include. A lot of the carriers now include telemedicine. We have it on our own plan. We have to pay a copay. And so we don't have any copays on our telemedicine plans. Our plans are what we call a two-card system. So the only difference between using us and using just the BUCA plan or a Blue Cross or Cigna plan is you're going to carry two ID cards. It works just like Medicare and a Medicare supplement. Your primary plan would be your Medicare and our plan would be your supplement. But members present both cards at the time of service. The provider will then file with the primary first. And once they get an EOB back from the primary showing what the patient responsibility is, they then turn around and file that to us, to the secondary, and then we pay the provider. So it's seamless for the employee, and it's really seamless for the providers as well. So why employers choose Pre-Med Defender? Well, we've talked about that we already can lower your claim exposure, because if we can take those front dollar costs and absorb it on our side, those claims never hit the primary health plan. And that should help with utilization. We've seen groups where we can achieve anywhere from a 10 to 20% savings in premium. We also are a long-term solution. We have groups that have been with us for going on 5, 6, 7 years. Some of those groups have never gotten a rate increase on their medical plan. And if they have, they've gotten very little rate increases, where the average is 12%, industry standard, 12 to 18%. And we provide white glove customer service. We know that there are going to be hiccups at times. There's going to be issues where providers don't understand. They should, but they don't understand how to file a secondary claim. And so we give all of our groups access to our member support staff to help walk them through the support. Why employees choose it? We give more affordable care for lower out-of-pocket costs. We can help lower their premiums. We also have the member advocacy to help with claims and billing issues, and we have the telemedicine service as well. And then why do providers? Well, providers love us because we pay them. That's just simple. They don't have to worry about going after the member for that money. They know the amount of money that what they're billed, they're going to get paid, so we can help reduce their bad debt, and we pay them in a timely manner. Most importantly, why do brokers love us? We can help reduce their clients' overall healthcare costs. Again, we fit seamlessly with any type of insured medical plan. We can carve out the doctor office visits and prescription drugs. And again, we have those dedicated account managers that can help them and assist with claims. Enrollment and underwriting, we go down to 5 lives, and we do only W-2 employees and their dependents. We need at least 50% employer contribution. Our plans are all guaranteed issue. There's no pre-existing condition. And again, there's no network involved. We follow the primary health plan. So whatever the primary health plan pays, we mirror that. We have all customized marketing material. All of our brokers have brochures and flyers that we can customize for them with their contact information as well. And it's real simple to quote. All we need is the census of the employees. We don't even need dependent information, the desired plan of what you'd like to see built, an effective date, and then whatever their current renewal rates on their primary major medical plan is today. And then we can get a quote turned around usually within 24 hours. These are the available states that we're in. We're in most all states. I think we're in 32 states with 3 different insurance carriers. But we have good state coverage around pretty much all the Southeast. We're covered. So that's our presentation. If you have any questions, I'll turn it back to you.
Yeah, sounds great. Sounds great. So 2 or 3 things there. So you might or might not have heard of a gap plan. 2 or 3 things I want to talk about is one is you've got the way I look at deductibles, and this doesn't really matter whether it's auto insurance or homeowners insurance or health insurance. The higher the deductible, that means the more risk I'm taking as the insured off of the versus the insurer, the insurance company. So the lower the premium, the least amount of risk I want to take, the lower the deductible, the more expensive it is, because all of the risk, wherever the majority of the risk is the premium is going to dictate that. So clearly, high deductible, lower premium, lower deductible, higher premium, and vice versa. Well, so that's one thing that's factoring into this. Now, another thing to factor into, and Wes mentioned this, is utilization. With health insurance, the more you use it, the more expensive it is. It's just the way it is. You have a group and you've got a lot of, traditionally, if you have a lot of older people in it, take more medicine, more things happen, versus a group of younger people, it's more expensive. That's just how it is, unfortunately. You have a lot of claims. You have a lot of diabetics in your group. You have people that had surgeries and things like that. Stuff happens. It can throw things off, and the insurance carrier is going to rate you accordingly to that. I would venture to say that very few people that are watching this and listen to this have had rate decreases on their health insurance. It's happened before. Not very much. I remember, you know, I pay, for me and my family, my health insurance is $2,300 a month, Wes, is what we pay on the health insurance side. Well, for a better plan 10 years ago, I was paying $450 for it. It is what it is, and it's not going to get any better. The government gets involved occasionally, and they usually mess things up, in my experience. And so, when I look at plans like this, specifically this product, to make this really simple. So, if you're like I'm on Blue Cross Blue Shield Platinum here in Alabama, I have a platinum plan, really low deductible, really low copay, great prescription benefits, all the above. Well, if I take that plan from the platinum down to the gold, I'm going to save $1,000 a month, $1,200 a month, or so on the health plan. Well, when I do that though, my deductible is going from $500 to $4,000. Well, there's a $3,000 gap right there. What we do with these plans is we look at your health plans you have now, right? And we look at what the rates are, what's covered, versus if we bump you to a lower plan, we'll call it, like a platinum to a gold. And then how do we make up the difference where it still feels like you have the platinum, right? And in some cases, it may be even better. And generally speaking, that say that $1,000, $1,200 there that I save on a monthly basis, if we can pop one of these in for $700 or $800, I'm $3,400 in the good. Now, don't hold me to those numbers. That's not accurate at all, but it's for explanation there. So the goal is to get everybody in a better situation coverage wise for less money. You got to hand out 2 cards. Is that aggravating? I don't think so. I see it sometimes in these smaller towns where you have this doctor that's been there for 42 years and the lady that's behind the counter has been there with him the whole time. And they say, well, we don't take this. Yeah, you do, because they pay, if whatever network they're in, they'll pay it. I said they'll flip over the back of the card and call that phone number. You'll be very happy you did. And they pay fast, and it's really simple and easy. Occasionally there's a little education that has to be done with that, but it's for the savings and the benefits you get from it. It's not a big deal. We've implemented this in a lot of groups over the years. It's a great saver. It's a little different. It's a little outside of the box in a lot of ways, because most people just want to hand that one card, but handing 2 cards is not a big deal. Doesn't take up that much more space. It's a thin card, and you do that. So with that, you save money immediately on that gap, that difference in there. And a lot of times you might can even bump up the coverage some, but also it's going to lower that utilization down because you're not using your health insurance as much. In a lot of cases, we don't see employees even tap into their health, their major medical, because this policy would cover the majority of everything they did. Which eventually is going to help you out with rates. And over time, you're going to see, bare minimum, if it keeps your rates flat, that's a home run, but it also will make your rates go down over time. I mean, there's going to be a lot of different scenarios there, but I just think this is something definitely to look at, especially right now. Everybody's razor thin on your profit or your margins. The cost of employing people is so much more expensive now. It doesn't matter what industry you're in. It doesn't matter how much you're paying somebody. It's tough to find and keep good people, and you have to have an amazing benefits package. You can't compete without it nowadays. 10 years ago, you could have the racehorse philosophy where if it goes lame, just put another one in there. And a lot of people ran their business that way. Well, you can't do that anymore. You have to have an amazing benefits package. You have to have an amazing culture. You have to have a lot of things. So this coupled in with our SMERT plan is just a over the top amazing deal there. And a lot of times you could use the allotment money to pay for this, even if you wanted to. What I found is most employers are just paying for it, covering it, because it saves them so much more money a lot of other places. But there's so many ways you can structure this and make a plan feel however you want to. Their team there, Wes and Clay and all the people they have working with them, they do all the heavy lifting. And so it's, hey, here's what we've got. this is what they do all day long. They're experts in it, and they say, "Hey, here's a couple different options. This is what I would do," and they lay us out a really great plan, and then we just decide which one you want. So all of our contact information is here on YouTube or wherever you're watching this at Facebook. CitadelBG.com, www.citadelbg.com, or you can call us at 256-826-5674. That's 256-826-Josh. And glad to fix you up. If you're a broker watching this, give us a call. We've got some amazing contracts for you. If you're an employer watching this, give us a call. This is a great option for you. If you are an employee watching this, get this to your boss. Tell them that you want this in place there. Any questions, if you have anything, guys, just let us know. With that being said, Wes, anything else, any kind of parting words that you want to say?
No, you've done a great job, Josh. That was a great job explaining it. So we really appreciate you giving us the opportunity to talk about Pre-Med Defender, and look forward to hearing from some of your folks.
Absolutely. It's a great, great tool to add to your toolbox, everyone. Appreciate you watching this. And if you need us, you know where we're at. Thanks so much. Bye-bye.